YieldMax just launched a brand new option income ETF. This one covers AI and tech. Hello my friends, this is Legend. YieldMax just launched a brand new portfolio option income. So this one here is a lot like LEVGY, LFGY, except LFGY is all on the crypto plays. So it is a conglomerate of crypto plays, and this one will be a conglomerate of AI and tech plays. So let's just take a little look at what this one looks like it's going to cover and what it's going to do. Okay, so it will be an AI tech portfolio option income, and the ticker will be GPTY. So GPTY is an actively managed ETF that seeks current income and capital appreciation through direct investments in a select portfolio of 15 to 30 AI and technology companies. GPTY aims to generate current income through an options portfolio on AI and tech companies. Well, like I said, where LEVGY was a select portfolio of about 15 to 30 crypto plays, this one will be a portfolio of about 15 to 30 AI and tech plays. Interesting. GPTY seeks capital appreciation through direct investments in a portfolio of 15 to 30 AI and tech companies. To enable GPTY to effectively implement its option strategies, GPTY's advisors evaluate the liquidity of a potential company's common stock and the liquidity of its options contracts. Any dividend paid by its AI and tech companies will contribute to GPTY's income generation. So nothing new there. They will pay out distributions accordingly through that portfolio, through the AI and tech company plays. GPTY seeks to generate current income primarily by writing and selling option contracts on some or all of its AI tech companies. If you're familiar with YieldMax, you know that's what they do. They write and sell options against the companies within that portfolio. Depending on its advisor's outlook, it will select one or more option strategies that it believes will best provide GPTY with current income while generally also attempting to participate in a portion of the share price increase experienced by the AI and tech companies. Further, depending on the advisor's assessment of one or more of the AI tech companies' option contracts, GPTY may employ option strategies on an AI or tech company. As you know, like I said, they will sell calls against the underlines within that portfolio, and also seems that they will participate in the portion of the share price increase experienced by those companies as well. So it looks like they will be purchasing into the actual underline as well, and I think that's what they're doing with LEVGY as well. Except, like I said, LEVGY being crypto and GPTY being AI and tech. So GPTY is the newest member of the YieldMax ETF family, and like all YieldMax ETFs, GPTY aims to deliver current income to investors. With respect to distributions, GPTY aims to make distributions on a weekly basis, and its first weekly distribution is expected to be announced on February the 5th. Okay, so again, this one reads very similar to LFGY. This one will also pay weekly. Now, the first distribution for GPTY will be February the 5th. Today is January the 23rd, so it will not be next week. It will be the week after. So there's a little section here of why to invest. GPTY seeks to generate income which is not dependent on the value of its portfolio of AI and tech companies. And GPTY seeks to participate in some of the potential share price gains experienced by its AI and tech companies. So, and they did highlight that in bold, the potential share price gains. So it looks like you would be able to capture some of those price gains on this portfolio ETF. So let's go over to the YieldMax website and let's check out GPTY on their site. Okay, so here we are on the YieldMax ETF site. You find this one, you can find it by going to our ETFs here and go down here to the YieldMax portfolio ETFs. And here is where LFGY is. That's the crypto play. And then this is the new one, GPTY, which is the AI and tech portfolio option income. Okay, so here we are on their site. It just opened today. So, of course, there's not going to be anything as far as in distribution rates and all this because there has not been a distribution. As you can see here, as we know, GPTY will be an AI and tech portfolio. This here is roughly what we just read in the letter that was sent out. Okay, this one here has a gross expense ratio of 0.99%, and it looks like it will be opening at around that $50 range. And if you scroll on further down, you'll see there's the holdings here, and this is just the top 10 holdings. So some of the ones that they'll capture are NVDY, C3AI, there's Palantir, Meta, Apple, Microsoft, Alphabet, AMD, Snowflake, and Broadcom. So that's a nice list for the portfolio right there. Those are some really good companies to be invested in too. I really like these. Now you can see here, it also gives the weights of each one. So like NVIDIA and C3AI, both of those are a little over 12% over here on the weightings. You have Palantir with about 5 and Meta with 5, and actually all of these are just under 5. So roughly about 5% on these 8 and 12, a little over 12% on the top 2 here. Now, this doesn't mean this is all of the ones that they actually will use. There will be others, I imagine, because it did state 15 to 30, and this is just the top 10. So you can actually see all of their holdings by clicking this download button right here. And when you click that button, you'll get this sheet right here. Okay, so this is the sheet that you will be able to download if you click that button to download all of their holdings. And as you can see, I'll just kind of run through these. There's a few extra that is not on that list, of course. There's Apple AI, that's the C3 AI. That's the same as what we called out earlier. AMD, Amazon, there's Broadcom, Salesforce, and Google, of course, IBM, Intel, Microsoft, NVIDIA, there's Palantir again, Qualcomm, Snowflake, and of course Tesla. And then the Taiwan Semiconductors as well. So that is a very nice portfolio of AI and tech. This one here is very interesting. I'm very curious to see how well they can keep up with the movements of these. AI, as you know, has a lot of volatility to it, so the premium that could get paid could be pretty nice, especially on some of the smaller AI companies because they can move a little bit more. Now, of course, with just selling calls, you actually wouldn't mind it just staying flat as far as in the price, because that's how you really make money on selling calls. If the price of the stock goes up and it goes past your strike, you would have to pay to get out of it. Or I should say YieldMax would have to pay to get out of it. So as that price would increase, they would pay to get out of that call if it got close to expiration. But if the price stays under their call price, then of course it would expire worthless, and therefore they would get to keep all of the premium, and that's where we start making some really nice premium distributions. And even if the price goes down, we would get to keep those premiums because it never got above that strike price. But of course, the difference here is they are also investing into the underlying of these stocks. So I'm wondering how that's going to affect everything outside of just doing option plays. So I think I'm going to wrap it up right there. I just wanted to announce and let you know that there is a new YieldMax portfolio ETF out there dealing with AI and tech. So I'm very curious to see how this one's going to play out. I do like their portfolio. I do like the ones that they have in there. So this one has me intrigued. So if you would please take a moment to like this video and subscribe. And if you could, please share it out with your friends. Let's try to get this channel growing. But as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.